One of the many sectors that have been disrupted by the pandemic is commercial real estate. From consumers embracing online shopping and people working from home for over a year, to what could be long-term migrations out of cities, this kind of movement clearly impacts the property sector. However, to fully understand what's happening and to be able to see where there might be opportunities or obstacles requires data, and the ability not only to collect that data, but also to analyze it in ways that highlight things that might otherwise be overlooked. Like many industries, commercial real estate has been slow to adopt technology. However, that's changing now, and it's affecting everything from identifying top locations to shining a light on operating costs. I'm Jane Singer, and welcome to A Seat at the Table. Each week, I sit down with leading executives, entrepreneurs, authors, and innovators who share their experience, expertise, and insights about the future of business. Rob Finlay knows the extraordinary value of combining tech, innovation, and data within the commercial real estate sector. He's pioneered applications that do essentially for commercial real estate what Bloomberg terminals did for the financial sector, making previously difficult to get data accessible. Rob joins me today to talk about what he sees happening in commercial real estate, from market shifts and cost management to using data to identify new opportunities. Before we get started, if you're looking to develop knitwear collections that will stand out in the market, then Spin Expo is the place to go. It's the primary exhibition for yarns and knitwear. The fair is a rich resource featuring well-edited, high-quality collections, as well as cutting-edge technical innovation. Not to mention outstanding trend information that cannot be found anywhere else. You can learn more at spinexpo.com. That's www.spinexpo.com. There's also a link in the show notes. And check out our website. You can find all of the previous episodes of A Seat at the Table, the show notes, news about our upcoming masterclass series, and lots of other useful information. You can find it at seat.fm. That's www.seat.fm. FM because it's a podcast. Now let's hear what Rob has to say about commercial real estate. I'm so excited to be talking to you today, Rob, because I don't get to hear too much about what's happening in commercial real estate. And I think that this is such an interesting time to be talking about it, because with more people looking to work from home, companies considering hybrid home office solutions, and for reverse migration where a lot more young people are now opting for the suburbs and even rural areas over city living, it looks like there's a lot of disruption that's going on. So I'm really keen to hear your views and then what you're doing with combining tech and CRE. So perhaps we can jump in with you giving us an overview of what you see happening right now.
Well, you're absolutely right, Jane. It is a really interesting time for commercial real estate. And when I talk about commercial real estate, I typically think of commercial real estate as things like multifamily apartments, bigger projects, office projects, things like that, and hospitality. And it's really interesting that we're really starting to see this dynamic, right, of people not necessarily wanting to go back to the office, but yet they want to go back to something. And we're seeing that in our own operations, where there are some of our companies that we're involved with in the capital market side, they actually haven't left the office. They have to be there. They have to be in front of their Bloombergs. They have to be there to just do the things that they need to do. But everybody else, in particular, software developers, they typically don't like to work in big offices anyway. They're working at home. So it really is this really interesting dynamic of where people are in the relationship of work and live, work. It's this whole dynamic is really changing. And what's exciting is it's unfolding every second of every day.
Wow. You don't really think of it that way, but I think, yeah, you're right. There's a lot of disruption right now.
Well, there is. And you think about it, just the migration paths of people working every day really changes the dynamic of everything. Obviously, people who are living at home are going to restaurants during lunch now, not just dinner.
It's so interesting when you bring that up. And I guess the question on everybody's minds is going to be, is this a temporary thing that once the pandemic is over, everything's going to go back to the way it was before? Or is it a longer term migration, which means that people are going to have to think about totally reconfiguring their portfolios?
Yeah, it's hard to tell. I think there's going to be a nice balance, but I think that's the sort of the maturity of the industry as well, and just of the way we work. It's going to, time will tell, but I think there is a fine balance between getting people to work in offices, to collaborate, to have some engagement, because that is one of the things that I think is, and obviously I'm zoomed out, as you and I were joking earlier, we're on Zoom calls every day. I mean, it's from 8 o'clock in the morning until 6 o'clock at night. It's just Zoom after Zoom. And I think people really miss some type of engagement. Our office, where we have a lot of our software and development, people choose to go into the office, and they choose to go in just really more for the human interaction and the human engagement that I don't think we get when we're sitting and with a big microphone in front of us and a computer screen.
Yeah, that's very true. I think that with the work from home thing, for people who weren't able to find some kind of alternative social engagement, whether it be just social or whether it be work related, it became very tough.
Absolutely. Absolutely. And I think that's the same thing for a lot of leaders, a lot of people who are in business. We like to engage with the people that we work with. We like to motivate people. We like to, yeah, to be there and see what's going on and having our fingers on the pulse of what's going on in the business. It's about adapting to change, which is really the most important, which in commercial real estate, that's been a challenge in the past, right? Because commercial real estate is you're buying buildings, you're selling buildings, you're leasing buildings. It's the same thing over and over again. But as time goes on, in order to really differentiate yourself and raise investment capital and really create enterprise value, leaders of commercial real estate firms are having to change themselves. And so this was really almost a forced change on the way that real estate owners have to manage their groups.
Now, I know that you've been working not just in commercial real estate, but also in a tech angle on commercial real estate. And typically, we don't think of big tech and CRE in the same sentence. So what are you working on, and how's that changing the dynamics of things?
I think commercial real estate has always been, and I'm going to caveat by saying this. I grew up in commercial real estate. My grandfather was in commercial real estate. My dad is in commercial real estate. My brother's in commercial real estate. I'm in commercial real estate. And when you grow up in a family business that's involved in commercial real estate, that's what you do. But for the past 20 some odd years, 22 years, I've been very fortunate to make a living by providing solutions to commercial real estate owners and operators that make their life easier or help provide some efficiency in the market. So I started that in 2000. I created a company called Defease with Ease. Defeasance is a type of prepayment penalty on commercial mortgage-backed securities or commercial mortgage-backed loans. And we helped create a process so that borrowers could get through this cumbersome process quickly and efficiently. But ever since then, we've been doing for the past 22 years, building software and solutions that have really helped commercial real estate owners and operators. And as our time has matured and the acceptance of innovation has been met with in real estate, we've started to realize that the data that is involved in the collection and the harnessing and the using of data in commercial real estate is really providing some tremendous advantages to owners and operators. And so it really is becoming this kind of arbitrage today where there are groups that are out there that are able to collect data, aggregate data, analyze data, and make decisions off of data. And they're at such a competitive advantage over others that cannot. And so what we're trying to do is, and what we are doing, is we are helping commercial real estate firms take that data in, aggregate that data, visualize that data, and understand what that data means. And data is from everything, from operations to debt optimization, to traffic patterns, to migratory patterns, to where people are going, cell phone data, all these sources of data that we're taking in and helping people understand.
We're going to take a quick break now, and then we'll be right back.
We were hiring when we were making 50 to 100K monthly losses.
And why? Welcome to episode 1.
I can't think of a single founder who's been around for a decent amount of time in business Who hasn't had their tunnel of year? This was that year. We're going to be okay, yeah, Sheree. Some are going to hear this and think, you TDP. But hear me out. You only have to do the math to understand that very soon we were $500,000 down.
Wow, that's really interesting because you really don't think of commercial real estate as being something that's data driven, right? You think of it more as a physical asset kind of a thing. But you're right, there is actually a lot that if you're able to collect that data, you can probably see a lot of things that wouldn't be obvious if you were not looking at it from that point of view.
That's really the key of data. Data really does four things. You visualize data, you analyze data, you activate off of that data, and you can report on data. And so you have all of these things that's what data does. And by visualizing it and analyzing it, you start to really see just the visualization of data is just, that's one that usually gets people to look at it. It's the comparative of look at a data point, right? If you just looked on the internet and you said, oh, okay, what's the stock price of GE today or Amazon? And it would show you one spot rate. But if you were to look at a historical graph and you could see where it is, you could see it. It's a much better presentation of data. So that's where we think that the visualization of data is one thing and the activation of data. One of the challenges of any real estate owner and operator is actually the amount of data that comes in on a property. As you said, we're not really data driven, but we do generate a tremendous amount of data in commercial real estate. And so not only just financials, but operations and tenants, and these are working, operating businesses. And so they're generating a tremendous amount of data, and it's taking that data in and being able to actually work with that data to do things, to make decisions, to do things that you were supposed to do, understand when there's an anomaly in the data, understanding that your water bill is going up every month. Why? It's being able to work with it.
For example, what are some of the things that, and I'm sure there's a lot of examples, right? Because commercial real estate's a huge and very diverse market. But could you share an example of something that if you didn't have access to the level of data and data analysis that the solutions that you're working on provide, what might the picture look like to somebody just using the typical methods that they had before? And then what might they be seeing now?
Sure. There's lots of examples. One of them is, and actually we were involved with it just recently, we as not part of my technology group, but as part of my investment arm, we invest heavily as either an LP or a joint venture in commercial real estate. And we were looking at making an investment in a real estate owner, and we were looking at past deals because a lot of times owners want to talk to you about past deals, and that's how they have performance, right? This is what we've done in the past. And we started looking at their deals, and their strategy was they would go and buy multifamily assets in really good locations, fix them up. These would be what they would call Class B. So they're not the brand new shiny stuff. They're the next level down. And they would fix them up and get them close to looking like those really nice shiny ones, but the rent is going to be much less. And it's a value add strategy. One of the things that we noticed, we started looking, and one of the nice things with data is benchmarking. You can actually aggregate data and benchmark how a property is performing next to other properties in that market. And so we benchmark everything. And so we started looking at their properties and benchmark to other properties in that market. And we started to notice that actually their repairs and maintenance, primarily on appliances, was a lot higher than others. And when we started looking at this, realized that their value add strategy was to come in and put in brand new appliances or new appliances into the properties. And they were constantly looking at the cheapest solution for those appliances for an initial cost, but they did not think about what the costs were ongoing. And it's really hard to separate that. Your business is moving at a million miles an hour. It's always going. And this was a perfect opportunity where we were able to identify that the initial cost of their appliances, based upon this ongoing monitoring of their expenses and the benchmarking of their expenses, meant that they were actually buying appliances that cost too much to maintain. They might have been saving a couple $100 on their initial cost. they actually were losing hundreds of thousands of dollars worth of value because of the increased operating cost of those appliances. So just things like that. And it takes a lot of data to look at that. It takes benchmarking, and it takes the visualization and the analysis of data. But when you start talking about the value proposition, as I said, they were leaving hundreds of thousands of dollars of value on each property that they could have saved just by understanding this.
That's so interesting. And I think that across many industries that typically have not been tech driven or have used tech in not such an advanced way, people are starting to realize that you're right, there's a lot of money that's being wasted on account of the fact that people are measuring things, but they're not necessarily measuring the right things, or they're not measuring everything.
When you start taking the data and the information, it's the same thing with looking at horizons to sell, right? You can start forecasting where interest rates are going to be, where cap rates are going to be, which is how we value real estate, where your rental income is going. And you'll find the time where you might be at the peak of the market for selling your property. So it's just providing you the information analytics to make much better decisions. That's all it is. You're taking the ability to make better decisions.
I think that's a good way to put it, better decisions, because it doesn't make the decision for you. You still have to do some thinking, but you're getting better data and you're getting to see it in a way that shows you a clearer picture.
We like to think of it as I know there's I was always led to believe that you only use like a small percentage of your brain. And I think that's the same thing here, is that we in commercial real estate are given a lot of data, but it's hard for us. It's impossible without the right system in place. It's impossible to be able to consume all that data and make decisions off of all of it.
Oh, absolutely. So if we can just dive a little deeper into some of the, I don't want to call it fintech because it's not fintech, real estate tech that you're developing, and what about it is so different than what's available. I think you've likened it to being the Bloomberg for commercial real estate.
Yes, it's about that. It's about data. It's about information. And I think that's when you think about what a commercial real estate firm does for a living, right? They come in, they identify opportunities, they identify properties, they find investors, they manage properties, they put debt on the property. So there's all these things that have to happen. And so what we're trying to do and what we're doing is building a system where data and information can pass seamlessly between members of an organization, and they can put that data together so that they can make better decisions. We look at commercial real estate as an ever evolving sort of industry that incorporates so many different aspects of what a business has, right? You have customers, but you have multiple customers. You have, because you have your tenants, you have your investors, you have lenders, and you have all these different sort of aspects of a business. And within our system, what we're trying to do is we're trying to get all those different aspects of the business to talk together, to be able to work seamlessly back and forth.
So are you able to get data from multiple companies and then to show a market picture, or is this siloed within individual companies?
Yeah. So what we do is we do both. What we try to do is we unsilo data. So yes, to your first question, we bring data in from not only their own internal systems, because a lot of times those internal systems are siloed. So your marketing department will have siloed data, your finance department will have siloed data, your accounting department would have siloed data. And so you have the siloed data. But yet you also have external market data and information, census data, weather data, you name it. There's all sorts of data that you can use. And our goal of our organization is to take all of those data points together and put them into one place, because that's really the key. We started this business years ago because of one of the challenges that we realized is that data doesn't talk the same language. So, that was the wake up call for us. So these business intelligence tools are fantastic. And people talk about these BI tools, the Tableaus and the Power BIs and things like that. And these BI tools are great and wonderful, but in order for them to work, before you get any value out of them, your data must talk the same language. And I think that's a people don't necessarily realize that your data that comes in from your accounting system doesn't talk the same language as the data that comes in from Excel. And it doesn't talk the same as that comes in from census data or web data. And they all speak different languages. And by the way, so does your BI tool. And so it's a matter of getting all of these systems to translate and talk to each other. And that's the real power is once you have data that can talk together, that all speaks the same language, then you can ask it any question you want, and then you can uncover whatever you want. But that's really what we've been focused on is building the platform to ingest data, to get all different types of data into one place.
Yeah, I think that's really an interesting project and not an easy one because, as you said, data integration is actually a rather complex thing to achieve. Are you able to, in any way, get data from multiple companies to create a massive database of what's happening across not just all the properties of one particular company? I mean, that obviously they might not want their name on it, but is that possible?
Sure. Yeah. So in fact, so we are working with IREM right now. We're in a partnership with IREM, and IREM stands for the Institute of Real Estate Management. IREM is really the association for property managers. And in our partnership, we are helping them take member data. These are real estate firms that are members and they manage properties. And what we do is we bring the data in, we anonymize it and organize it so that you can now benchmark that information. So you're not just getting your information, but you're getting your information, but other property information in a market. And so you're able to understand where you are. You can benchmark your property. So it's basically a peer-to-peer benchmark of property performance. So it's really exciting stuff.
Wow, that's incredible. I think that's going to be a total game changer for anybody who's working in commercial real estate.
Yeah, it's really the first time. And what's really nice about it and what makes the data really nice and very valuable is that the data actually is member delivered. So it's the actual operator that's delivering this information. So it's not somebody coming in and trying to get the information. It's not getting it from a secondary source. You're actually getting the information is coming directly from the company that is creating it. And so it's really good and information, and we've organized it. So it's actually a really good, and that's where the technology comes in, is really to being able to put the expenses in the right place and basically get the information in the right place so that you can have a real good peer-to-peer benchmark.
So is the technology doing the data integration part, or is the technology providing a bigger data set or analytical tools for that data set?
So it's doing all of the above. So the first thing obviously is ingesting the data, right? So we've got to get the data in, but we also, if let's say you call something an elevator expense, and I have something that's called, maybe I put my elevator expense in mechanicals. Well, we need to be able to line those expenses up so that you're apples to apples. And it's really the apples to apples, which is where the technology, where the real high level, it's artificial intelligence. It's a lot of just, you can use all the acronyms, the NLPs, all this other stuff, all the techo geek language into what we're doing to line that information up so that when you look at your property and you see your expenses and your income in that category, and you look at your peer-to-peer benchmark, which could be 50, 100 other properties in your market, that when you're lining up the two expenses, that you know that those are accurate and those are valid. And that's where you can now, as an owner, getting this information back, you can see where you are leading or lagging your competitive set.
Wow.
And then it also gives you direction, right? I think that's the commercial real estate has been a very opaque market. And just, it comes back to the same thing of knowing what is the actual performance. And when you know the performance and you know the benchmark, that's when you get better at your job, that you can understand quickly and easily. And this is the benefit of data. Once again, data comes in, you see it. Oh, wow, my expenses are higher than this person's expenses. My expenses are lower than this person's expense. At least I know where I am relative to the market.
And then you can figure out what you can do to either maximize or minimize what you're seeing.
Yep. gives you direction, which
Yeah.
right? Otherwise you could just be going down the wrong rabbit hole. You could be thinking that you're great and you're wonderful, or on the flip side, and that's, as we said, it comes back to that story I gave you. Here, this group thought they were really good because they were buying cheaper appliances up front, but yet looking at the data, it was costing them so much more to operate over the life of, or how long they've owned the properties. And not being able to get that data and that information in really puts you at a huge disadvantage to those who can.
Oh, for sure.
Real estate is all about risk adjusted returns. People talk about their returns, but they don't put the risk adjusted component to it.
Yeah, that's very true. I think that there'll be a rude awakening for a fair number of people who haven't figured the risk side of the equation.
And that's what it's all about. And once again, it comes back to having data and information. If you have no basis for it.
So is the technology that you're developing pointing things out from the point of view of a risk analysis that you might not be able to gather otherwise?
Yes. Yes. I think that's probably one of our biggest value propositions of what we're doing. Our software allows the user to visualize data and look at things differently. And when you start to look at, and when you start to add in the data sources, you get a much cleaner and clearer picture of your investment. And so you can start to look at those things like where people are moving. If you're starting to see a lot of people move into an area and you own a piece of property there, maybe that's a good thing. Maybe the risk has become lower. If a lot of people are moving out, the risk could become higher. And so just giving people the visualization and other data points to make decisions helps provide a better risk adjusted return, because they now can understand where that risk, they can visualize and quantify that risk. And that's where there's real value.
I think that's a very good point. And I think that perhaps, correct me if I'm wrong, but maybe it would allow people to understand the difference between what they're hearing in the general media versus what's actually happening. For example, during the pandemic, we were hearing that everybody's fleeing California and fleeing, I forget where else, New York, and moving down to Florida or moving to Texas or wherever they're going. And so you hear these things, and these stories end up taking on a life of their own. And with your technology, you could see actually how big the movement is. Is it a huge movement, or is it just actually a few people who happen to decide to move? And how
Right.
different is that from other times?
Yeah, absolutely. And that's right. And when you start taking data, right, I think we can all agree there's been maybe a limited change of migration path, like people moving from office buildings into their homes. And so they shop more locally, they don't go out as much, but that's very different than them moving from Charlotte to Florida, or from California to Florida, or New York to Connecticut, or wherever. So it's really understanding those. And right, it's about, is there so much media hype, right, in everything that we do? So it's about understanding the validity of that data.
Yeah, I think that's actually as critical as analyzing the hard data that's coming in from operations and so forth, because it's very easy to hear these trends and hear these stories and feel they're a trend when they may not really be an actual trend.
And that's what data and analytics provides. It's getting that data in and being able to understand it and look at to see if, is it really a trend or is it not? And that's where it's, instead of one data point, visualization of data is very important.
Yeah, I think that's so critical these days. On the one hand, it's a good thing to have access to so much information, but on the other hand, it can become very distracting and become very difficult to see the real picture.
Yeah, I think that's the environment that we're in. I think at one point we calculated that the average real estate owner operator, or the average property generates about 3,000 bits of data. And so when you start thinking about these 3,000 bits of data, how can you possibly consume that much information? And that's just on a current basis. Now you start taking historical context to that. It's impossible to consume that much data and that much information without some type of system to help. As we go back to our Bloomberg analogy, could you imagine being a trader today without a Bloomberg terminal, or any other terminal for that matter, where you're getting financial information? You couldn't do it. right? And real estate is the same way. We're generating just as much data and information. It's just that we're slow to get that Bloomberg terminal. We're slow to get that information in a centralized place, but it's coming. And that's what our goal is to do, is to help real estate owner operators basically get that understanding of that data to harness all of the data that's coming into them.
Yeah, I think that's great. I think that's going to totally revolutionize the way people manage their businesses. Now, just off the top of your head, and we were just talking about these trends in where people are moving to. Does anything come to mind where you're seeing since the pandemic shifts that you think are more long term? Not someone who's decided to go down to Florida for 6 months because of the pandemic, but where you've actually seen what you would call solid movement.
I see some of the Northeast moving to the Southeast. I'm seeing more migration from the West Coast to more of the central or West mountain states. What's really interesting, you start to see some real movements of micro markets too, from Pittsburgh to Dallas. Things like
Right.
that are micro. But since the pandemic, I don't think there's enough data yet to make a clear play.
But I think it's interesting to be able to look at these shifts and try to understand how they're going to impact not just where people are living, but then, of course, the whole retail sector as well, and everything else that supports people's livelihoods and people's day-to-day lives.
Absolutely. You can look at credit card data, you can look at cell phone data. And so you can actually start to see the patterns of where people walk, where they go. And so you start to see much better patterns there, as opposed to bigger migration patterns, because you can, hey, there's more people going to this grocery store than this one. Hey, there should be there. Why is that going on? So that's where the information is getting interesting, where you can actually see to the very street level or property level where people are going.
Yeah, that is very interesting. And, how that might shape where developers are going in. And then after that, of course, where retail and where offices might choose to go in.
Exactly. Because that's always good, is being ahead of the curve.
Yeah, for sure.
Right.
It's where we'd all like to be.
Right.
And I think that with the kind of software that you're providing, I think this is going to be just tremendously game changing for people who are able to have access to it.
Yeah, I think it's the combination of what we built, but never underestimate the ability of the user. And because really real estate it's about seeing things that sometimes the data can't provide. Also having a gut, we can't underestimate that enough, as how important that is. The real estate operator, the owner, the developer, the visionary. Without that, the data still doesn't, the data is not going to provide stuff. It just helps them and lets them think about other things and adds more to their vision. So the two are needed together.
You need the human side of it, which then you enhance with the technology.
Absolutely.
Just one other question, and that is, you mentioned that private equity now is targeting single family homes. That's a very interesting statement.
Yeah, the single family rental market is a booming market. It's become a very fast growing segment of our industry, of the commercial real estate industry. And it's huge. And a lot of these big private equity firms have been around for years doing this. They've just, now there's so much demand. It's become interesting now because you're competing against people who want to buy homes with people who want to buy homes to rent. So it's been a very big market, fast growing market, and a very almost a I don't want to say maturing in terms of it's lived its life, but maturing as in there's now financing available for it. There's equity available for it. It's really become instead of this sort of little niche property type, it's now become very mainstream, much more. It'll be interesting to watch as the stock becomes less available or for to buy. You now are building, and it's an interesting market, and one that it's all for the search of yield. And that's really where we're at. We're at a point where now in any market like this, where it's people are looking for yield, they're looking for return. With a 1.2 10-year treasury, 1.238% 10-year treasury, you've got to, and almost nothing in money markets for returns. You've got to find places to put your money. And I think that people look at single family homes as from a risk adjusted return as a good investment.
Yeah, for sure. It's interesting because I grew up in the age where people's whole focus was to be able to own rather than rent. So it's interesting to see the growth in demand for rentals.
Oh yeah. Yeah. I think that comes down to where people want to have the flexibility. I think there's also some student debt associated with people not being able to afford the deposit of, but there's some other factors for that. If you start looking at the quality of rental and the quality of the properties that people can live at, there's some big dynamics for wanting to rent as opposed to buy a home.
Yeah, absolutely. I think the question, and this is aside from what we're talking about here, is at what point will interest rates have to come back to something better than what they are now? Do you know what I mean? It's just been, we all keep asking ourselves that. They've been so unrealistically low for so long.
Yep. Yeah, we discussed that. We have a structured finance and capital markets, commercial real estate capital markets firm, and we do all debt advisory. And every Monday morning we get on our call with our traders and we basically record it. We do our podcast and let people listen in. And that's always the question is how long can this keep on going? And once again, you talk about volatility, 10-year treasury was 1.5% just about a month ago. Yeah. So now it's dropped and it dropped down to about 112. And so you're seeing this volatility. And then for somebody who's financing on a 10-year rate, that's a lot of volatility. And so it's how long will these rates go? And that also adds to an asset bubble.
Yeah, for sure. I think a lot of people that I talk to, which are not in the real estate sector, but there's growing concern over how long interest rates will stay low. And now we're seeing inflation creep in, and everyone's just sitting there saying, what's going to happen next?
Yeah. Yeah, I think that's really the challenge, right? Just trying to figure out that's the $1 million question. What's going to happen? We know we have inflation. We still know in the real estate market, we know that there's millions of homes that haven't been foreclosed on. And we know that there's millions of people that haven't been evicted. So at some point, something's got to happen. If we're going to keep on holding rates low, there's only a matter of time before we can't do that anymore. It'll be really interesting to see. I think when it starts to hit a better equilibrium is when it will be very interesting in the economy.
Absolutely. Interesting is exactly the right word.
Right. Right.
Rob, it's been so great talking to you. I have learned a huge amount. You've opened my eyes to an entire new world. So I thank you very much for sharing your expertise and your insights.
Great. Thanks, Jane. Thanks so much for having me on today.
If you enjoyed this episode of A Seat at the Table, join me each week when I sit down with leading executives, entrepreneurs, educators, and authors who share their insights, experiences, and vision for the future of business. And make sure you visit Spin Expo. From trend information to technical innovation, Spin Expo is the primary exhibition for yarns and knitwear. The fair provides well-edited forums featuring high-quality products that are bursting with creativity. To learn more, go to spinexpo.com. That's www.spinexpo.com. You can also find a link in the show notes for this episode. And don't forget to check out our podcast website, where you can find all of the previous episodes of A Seat at the Table, the show notes, news about our upcoming masterclass series, and lots of other useful information. You can find it at seat.fm. That's www.seat.fm. FM because it's a podcast. Thank you for joining me today. I'm Jane Singer, and I'll see you in the next podcast episode.